Hello traders, Cousin Vinny coming to you from theclosingprint.com on July the 1st, 2018. In this edition of your weekend video newsletter, we'll discuss the weakness in all of the U.S. indices last week, in addition to international markets. We'll talk about all of the mixed signals that we're seeing with institutional sentiment on the New York Stock Exchange bearish and the NASDAQ bullish. NYMO and NAMO are cycling lower but are near extreme lows, so that could turn back up. We'll talk about the leaders, all of which were lower last week with the exception of Apple, which eked out a meager gain. Breadth has turned up. We got prices moving off the lower Bollinger Bands. We got high-low percent down in the 50 range turning up as well. And we have the New York Stock Exchange advanced decline about to move out of the red zone. We also have CPC in the green zone, which is bullish at 132 last week, which was a significant high. VIX is at 1609. That could come back in. It's above its 50-day moving average. VIX VXV is fading. That's also bullish. And we got lower highs. The bullish percent is at 57, which could turn back up fairly easily. It's well off of its extremes. USDollar, again, rejected at a quadruple top. Resistance around 95 continues to hold. Sectors are mostly yellows, oranges, and reds. That could cycle back in the other direction, but it's issuing a word of caution. And we only have a couple of international markets, green and moving higher. We'll look at these IBD 50 names in addition to some MarketSmith Growth 250 stocks that we see here in the list. Bukowski has 4 or 5 green. His CPI signal has been red since June the 21st. It's currently at 22.7, which is bearish. That tends to turn back in the other direction, so yet another mixed signal. He has 17 bearish patterns, 5 bullish patterns, and 243 patterns waiting for breakout this week. Bottom line, we should proceed with caution again this week. Here is the S&P 500 weekly chart. Note that since the January peak, we've only made 2 weeks lower before bouncing. We have buyers stepping up right at the 20-period moving average on this weekly time frame. RSI is drifting a bit lower. So given the things we're watching, this chart is more bullish than bearish at the present time. Shifting gears for a moment, we'll look at the Spyders daily chart. RSI did bounce below 50, moving a bit higher. To finish the week, we have major support at volume by price. We did start this sideways price action like we saw back here in May, which would lead to more failed attempts on breakouts. So if you're taking new positions, you need to be aware of the Spyders versus the NASDAQ, for example. In this particular case, if banks don't bounce, we could see a retest of this 270 zone to start the week. As tick cumulative shows, institutions were selling despite the fact that all sectors were green to end the week. Volume was higher and bullish. NASDAQ, by contrast, did manage a bounce at the 50-day. A-Rune up remains above 70. A-Rune down is at 0. So there's a possibility that the NASDAQ could bounce despite all of the leaders on the NASDAQ closing lower last week. In addition, the NASDAQ Composite of nearly 3,100 stocks, a broad measure of market participation, also bounced and found buyers at the 50-day as well as volume by price. So this chart is more bullish than bearish to start the week. Here are the small caps. We successfully traded this breakout at the 160 zone up to 170 before exiting. Price action has pulled back to the 382 using this low and this high to project our Fibonacci's. a wick on Thursday showing buyers are right around that 163 zone. However, Friday did stop and reverse, so we need to keep an eye on the small caps. There is potential for a follow through in either direction going into the first week of July. That said, this week is potentially one of the more bullish weeks of the year. Here is the New York Stock Exchange Composite of 2,000 stocks, another broad measure of market participation. We did bounce off the lower Bollinger Band on this Elder Impulse chart, which is showing the bears are losing control when this indicator turns from red to blue. It does not mean it's a guarantee we'll bounce further. However, we have slowed our descent. Confirming that is the New York Stock Exchange Advanced Decline, which started climbing on Thursday and followed through on Friday. One of those mixed signals was the New York Stock Exchange high-low indicator, which moved back above zero line on Friday. The moving average is starting to turn back up significantly. So we want to see a follow-through this week to confirm any new trades that we might take. Sectors that continue to show strength: real estate moving higher inside the sweet spot, moving above areas of supply on increasing volume. IYT, after a reversal on Thursday, long-legged doji, we did bounce on Friday and then fade towards the end of the day. We're sitting on top of the 200 period moving average. Increasing volume was bullish on Friday. XBI also showed us almost a hammer on Thursday, a reversal on Friday, leaving prices back near the lower Bollinger Band. We need to see a follow-through in biotech this week. Materials are forming a base. Wicks down here at 57.50, looking for a price to move above the 200 period moving average. Volume is starting to increase. XLE, we're looking for follow-through this week as well. Bollinger Bands to open up. MACD is crossing. Volume starting to increase. Looking for a follow-through this week. Financials are the anchor around the swimmer's neck. Multiple levels of support. We have earnings in 2 weeks on the 13th of July. Looking for volume to continue as banks reported good CCAR scores. They didn't follow through like we thought they would on Friday last week. So short term, this is more bearish than bullish, with the potential for this to be a multiple bottom and a reverse, as financials tend to do their best in the second half of the year. Industrials still being held back by potential tariffs and trade war fears that are keeping institutions at bay, though we are at a support level. Tech, we're looking for these shorter histogram bars to continue as price action moves higher. Consolidation zone that we saw in May, managing to hold prices for now. XLP, managing to produce higher highs and higher lows. 200 period is overhead. We're starting to see some sellers coming in after a nice move off the recent lows. XLU, while very bullish, starting to show signs of a flag. Keep an eye on utilities. These are doing very well. Healthcare continues to base just above its 200 period moving average. Consumer discretionary, one of the stronger sectors last quarter. Little profit taking, pulling back about 382 Fibonacci's from these recent pivot lows to the pivot highs. Watch for any rejection on Monday, Tuesday, as price action is right at the 20 period moving average. And finally, the XLP-XLY ratio, consumer discretionary to consumer staples, continues to trend higher. So consumer discretionary needs to continue outperforming staples in the short, medium, and long term going forward. Here is the IBD 50 list for the week of July 1st. Looking for price action to stay above the 20 and 50 period moving averages to assume a potential trade setup. Viper Energy would be one I'd be checking out this week as well. Last week we thought this could continue to follow through and move above the 50-period moving average. We did get that follow through. Now we have potential resistance at 33, then 33.63. Relative strength of the S&P 500 is climbing along with the whole energy group. So looking for a follow through here along with Diamondback Energy and Conocophillips. On balance volume and money flow show that institutions agree and are pushing this one higher. It reports at the end of July with excellent earnings percent change quarter to quarter of 73%, stupendous profit margins, and excellent sales, all leading to higher prices in this energy name. Some additional names that show up on the MarketSmith Growth 250 that are near or just about ready to break out. Antero Resources Corp, oil and gas, another name in this group with excellent numbers. Not that expensive. I would take a stop somewhere around the low on Monday. Look for a breakout and a follow through. Conocophillips, another name we like. Looking like that could break out. Volume is increasing. Relative strength line is at 91 and climbing. And look at the 2018 earnings estimates have been ratcheted up by analysts. So I'm thinking this one's going to continue to move higher. We can see the number of funds have been adding. June we'll have the next tally, so we'll know whether or not institutions still like this one. Looks like ConocoPhillips will continue higher as price action dictates bulls are still present. EOG Resources, same industry group, really like this one. Coming up to that 128.03 breakout zone. Relative strength line is climbing at 87. Hess Corp, same industry group, looking like it's going to move higher. Another name in the software group looks pretty good. MODN provides revenue management software for the life science and technology industries. Looking like this one's going to break out. Look for a break above 1960 this week, potentially. Volume is increasing and relative strength line is climbing. PetQ, veterinarian grade medications and health and wellness products for dogs and cats. You know people love their pets. Not surprised to see this one on a run for the last month and a half. Maybe a handle up here first and then a breakout in the short term. Surface Oncology, we have a very small position in this one from the breakout at 15.29. Looking for that to follow through this week as well. VNDA, Banda Pharmaceuticals, this looks good. Cup and handle pattern. This looks like it's going to break out. Fairly inexpensive name. Risk is about 50 cents. Once we start to see a breakout, look for a break higher above 20.50 this week on Banda Pharmaceuticals. Looks pretty good going forward. Web is another one that we took last week. We're about 20 cents in the money at the moment. Looking for a follow through and a breakout. This one gaps, flags, gaps, flags. We're looking for it to do the same. As institutions are ratcheting up earnings for 2018, we can see that institutions are continuing to add, and June we'll get our tally probably tomorrow when we see how these things have fared in the fund ownership department going forward. Okay, traders, that's going to do it for me. This is Cousin Vinny coming to you from theclosingprint.com on July the 1st, 2018. Your weekend video newsletter. We're looking for a watch list probably late tonight, around 9:30, 10 o'clock. Be cautious tomorrow. Second week that we've been telling you that. Give it to about 10, 10:30 before you do anything. All I'd be doing in the opening range is taking profits and doing some maintenance. Other than that, I probably won't be taking any trades until after 10 o'clock, 10:30 to start the week. Take care. I hope this helps, and we'll talk to you soon.